Good morning. Today is Friday, February the 17th. The time right now in Singapore is 10:45 in the morning. And over there on Wall Street, hardly anything moved, especially on the Dow Jones itself. There was no major economic release other than what we call a medium impact economic news relating to the producer price index. Now that came in slightly hotter than market expected. Previously in December, the PPI, the producer price index, was at 5.5%, and the market was expecting a dip down to 4.9% for the month of January. But what was released was 5.4%. So it was more than what the market expected, although it is marginally lower than the December number, but the market did not take it very kindly. Right after this number was released, the market basically came back down after maintaining a very elevated outlook going into this number. So that was the highlight for the night itself. But there is another very low impact data that came in, which is the Philadelphia Fed Manufacturing Survey. Now, this is an index that or data set that normally do not hot the headline, but what was released last night was eye-popping because the market was actually expecting a decrease from a negative 8.9%, no 8.9 to 7 to negative 7.8. But what the market received was the worst data since last year, okay, since 2021. The number came in was negative 24.3. So that means it says that the manufacturing sector, as far as the Philadelphia Fed Manufacturing Survey is concerned, is showing us that there is a very serious dip in manufacturing capacity. So that could be laying the groundwork for the scenario in which a recession is going to be forthcoming. And that is something that we will have to watch, although it is not a very major high impact data set, but it does give us an idea how bad the manufacturing sector is in the States. So that being the background, you want to stay on the short side rather than the long side of this market. Although the fundamentals are telling us the US economy is definitely heading towards a recession. Whether it's going to be a soft landing or a hard landing, we do not know. But you see, the technical is showing us a different data set. While the fundamentals are poor, we have seen that equity prices has been trying to go up. So that I believe has got a lot to do with the algos, the algorithmic trading program trying to push equities higher. Okay, so between the two, something have to give. Either the technical win out this contradiction, or the fundamentals eventually overrides the technical. Okay, so between the technical and the fundamental factors, as far as US equity concerned, we are still seeing the contest being fought out. But I think slowly we are beginning to see that the fundamental is coming ahead, and we can see that in the S&P 500, the market has tried to go up after a three-wave pullback. Technically, that should be enough for the market to rally beyond 4,200. But last night, we have seen that the price closed on the weak note. And now there is another possibility. The first three set of down wave, okay, could be the first set of a larger degree pullback, let's say, for example, this three set make up one, and then this one make up two, and then we'll probably be seeing another set of three wave coming down, and that could be targeting the 4,000 levels. The previous low here traded on end of January was 4,015, and by equality, the target is at 4,025. So between these two set of number, 4,025 to 4,015, the market could actually find a floor if this is just a simple pullback getting ready for another rush higher. But if the market extend lower, then that could be a very different story altogether. And the key to knowing this is looking at how the market come off. If the market goes down towards the 3,940 levels, then the market is telling us this is no longer just a simple correction. The market is getting ready to resume its higher degree downtrend. Okay, so do watch out for this possibility here. Over the Nasdaq 100, we're seeing something very similar to what I've just shown you in the S&P 500. Now we have a very minor three-wave pullback that should be enough for the market to start to continue to resume its upswing beyond 12,881. But last night the market closed on a weak note, and there is a marginal breach of this very near-term support line. That could be anything or it could be nothing. But if the market continues to go below this support line, then the nearest target for equality move here is 12,063. But there is another bottom here, again similar to the S&P 500 on the end of January. at 11,906. So between these two levels of 12,061 to 11,906, market may actually be able to find some kind of support. But if the market extend lower, now again, very similar, I want to give you another alternative. The market goes all the way towards 11,700 or lower. The market is telling us this is no longer a corrective pattern. It is getting ready to resume its higher degree downtrend. Which means to say, if you look at the weekly and the monthly time frame, then we are seeing the resumption of this down move starting from the beginning of 2022. Okay, so there is that possibility. So keep your eyes open to see what happened, especially tonight, because this day is the last trading day for this week itself. We want to see what the market closes at. Over in Asia, we can see that the Nikkei has open low and is currently struggling to go higher. Okay, but we have seen the price has already taken up the minor support line here. Again, quite similar. If the market do a very simple three-way, it could possibly find support at 27,173, and this is where previously where the gap is. Remember, on Monday to Tuesday, when the Tuesday market open, it opens with a gap, and this gap has not been filled up yet. But of course, gaps are very common in the Nikkei 225, so it may not be a defining factor. But I think what we want to consider is to extend the possibility of an extended decay implies the market goes all the way down to, let's say, 26,800, then that will be a different story. The market is telling us that the market is getting ready to resume its larger degree downtrend. Okay, and this market rebound is practically over. Okay, there is the possibility, so don't rule out the possibility just yet. Now, over in the Shanghai Composite, we can see that the market yesterday tried to challenge the 3,310 level, which was last traded on Monday in the last day of January at 3,310. Market last night only managed 3,308, which is 2 points away from this high over here, and it failed. And then in the second half of yesterday, in the afternoon, the market sold off, and this morning is still struggling. So for the time being, it is still trading within this band of prices, and the low side is 3,212. The upside is 3,310. So we want to see what the market does. Okay, if it breaks below and break below this support line here, then everything is going to come all the way down. Okay. Now, over in the Hong Kong market, we can see the Hang Seng market is trying to find its footing. Yesterday, there was a bit of a rebound, but it didn't amount to much. Even if it does rebound, I think the market would be able, would have to face very steep resistance between 21,700 to 22,000. So anywhere between these prices, I think the market will come under selling pressure, which may bring the Hang Seng index down all the way to this nearest support here, which is the end, which is the January the 3rd, okay, at the beginning of the year. We can see the market, it was at 19,300, okay. So there is this possibility the market may actually drift lower. So when we are finished with the equity index for now, let's go to look at the currency itself. Overnight, we can see dollar came back a little bit, which also resulted in the major currencies backpedaling. This morning, we can see that euro versus dollar has already marginally breached the previous bottom here on February the 11th, and the low currently is trading at 1.0655 and 0.650 right now, and we can see that the market have a minor breach here, and it may actually extend lower to challenge my target here, 10480. Okay, over in sterling. Sterling have quite a clean break right now. It not only broke the support line, it also broke this February the 3rd low, February the 7th low, and it's currently trading at 1.1952. Okay, so it is en route, okay, towards the 1.1840 levels. Okay, if you have not already sold, this is the lousy time to engage in a short sell right now, unless the market go back and test this support and resistance line. Okay. Over in the Aussie market, we have a bit of a gyration last night. Market attempt to go back up, failed, come back down this morning, broke this February the 6th low. Currently, it is trading at 0.6852, already on the way towards my target at 0.6720 levels. Okay, so market is on the way to this level here. Over in dollar yen, it's very clean break. We saw the dollar yen broke, okay, above the 132.90 the day before, and now it's challenging the previous high here at January the 6th high at 134.77. I think there's a very good chance market will take out this. And remember yesterday, I actually gave you another possibility. Market may extend all the way to 139. If that's the case, we are beginning to see the resumption of the bull market in dollar. So that is something that you want to consider. So we have seen dollar been falling since September last year. So that may come to an end at the bottom here at 127.20. Market now is resuming its uptrend on the basis whereby the last few data set that we saw, especially since last week, and including the non-farm payroll, we are seeing that inflation is coming back up again, and that will prompt the Federal Reserve to further tighten interest rates, and that is definitely bullish for the dollar. Over in dollar Canadian, we are seeing the market actually took out the 134.75 and is already challenging my initial target at 134.87. Right now, we are just trading just one touch below it, but I have every confidence that it may actually take out the 135.20. Okay, so again, using the same scenario, I think I want to extend this a little bit higher. I think the market, if it take out 135.20 convincingly, the market is en route to 136.20, another 100 pips more to go. Okay, so there is still the possibility that the market may extend even higher. Now we are finished with currency for now. Let's go and take a look at gold market. Now the gold market is still very sick right now. The market has simply had not enough conviction to trade higher. But at $1,826 last night or this morning low, you can see the market is getting very close to this pivot point here. The pivot point is somewhere between 1,824. Okay, because previously we can see that at $1,823 and about 90 cents, market couldn't go up. And then on the way down, after it penetrated to the upside, on the way down, it held at $1,825.16. So somewhere between these two set of prices, I put it at $1,824.50, for example. I think that is where we may see the return of some buying interest. And if that's the case, we want to see how the market react along this price line here. Okay, 1,824.5. Okay, there is a possibility the market may rebound from here, but we will have to see confirmation based on price action. Okay, over in silver, if silver is going to be the guide as to whether gold has already bottomed, maybe the timing is a little bit premature because it does look like silver has a little bit more to go, maybe another $1 more to fall before it can hit some kind of support level. That level is $20.58. So we have to see until silver stabilizes and also shows signs of buying interest. I think maybe it's a little bit premature to go in to buy silver just yet. Okay, so look out for confirmation in the silver market before you rush in to buy. Okay, but I think long-term buying is not wrong. I think it's the right move to do. But again, it's all about timing. Now, yesterday, Bitcoin has a big run up above 25,000, but only briefly. Now, if you go back and take a look at the higher time frame, which is the daily time frame, if I compress the chart, you can find that in August last year, the high traders was $25,200. Okay, so I actually made a very short video clip in Mandarin. Unfortunately, it was not in English. I forgot to do the English version, and I said 25,200 is going to be key. If the market can actually stay and close above this level, it may extend all the way to 27,000. Okay, but again, the market must, on the condition that it closed above 25,200, the market did not quite do it. It went beyond that to 25,270. Couldn't close it, and on a 4-hour time frame, it actually closed below, and the market actually tanks towards the second half of New York session, and it ended weak. Okay, so this morning there was a little bit of rebound. So this is definitely very, very clear cut a stop hunting exercise. Okay, the market wanted to go and challenge a previous high point, and if you do not monitor the higher time frame, you think that based on this structure itself, you'll notice that it is very, very bullish and it may actually go higher, and it may still go higher. The thing is that at this point at 25,200, there was definitely a stop hunting exercise. Market managed to penetrate, trigger some stop, and then reverse immediately. Okay, so this could be what we call manipulation. So if this market can stay above 50% of the rise from 21,376, maybe there is still hope that the market can actually rally. So right now we are near the 50% point. Okay, so a lot will depend what it does near this current level of this 50% mark of 23,300 levels. Okay, so we want to watch this level closely, and if there's any buy signal here, there is still another possibility on a week-to-week basis. this Bitcoin may still try to go up again. Okay, but in the meantime, definitely yesterday was a stop hunting exercise. It's the same is also evident in the Ethereum. Ethereum high previously as of February the 2nd was $1,714.10. Yesterday there was this attempt to there's this rally beyond that, way above this point here at 1,742, and then it couldn't sustain and close back down. Again, using the same metrics, if you do a 50% pullback, the level to watch right now will be at $1,600, $602.50 to be exact. Okay, so we want to see how the market react along this 50% mark here. If you can find support, well and good. That means there's still another chance that the market may want to rally. But if it does not and unravel all the way below 1,463, all is over. Okay, it means the rally is over. Okay, we want to see Solana. Solana is actually mimicking what we are seeing in Ethereum. Okay, Solana. Okay, Solana is mimicking something what we are seeing here. The market could not go beyond $24.23. The highest it did was $24.18 and started to reverse. And in terms of posture-wise, we have seen a very clean-cut three-wave, and this is not a very, very bullish development. If this is the case, we simply have to join these two bottom here and see whether the market can actually stays above this line. If it cannot, then there is a risk the market may come back down again towards the low that we saw at $19.64. So this is definitely not a very bullish development. Like I said, if the market fails to hold above this near-term support line, it may unravel all the way below $19.64. Okay. And we look at Cardano. Cardano is looking very similar to Bitcoin. The market went up above 0.414, which is the previous high traded on February the 3rd, and the high it traded was 0.421 and then unraveled. So again, the nearest support here is at 0.382, and if you want to do the 50% measurement, we will have to see whether it coincides or not. Very close. Okay, the market 50% mark is at 0.383. So taken as a whole, I think this low at 0.382 should be able to hold for now. So again, this is based on technical outlook, and this is all I have for you for today. And for those who follow me on my weekly market rep, remember to register for my Sunday webinar at 8 p.m. Singapore time, and I hope to see you there. In the meantime, take care and be safe. Bye-bye.